right. Well, hello. Okay, so we were talking about grid bots last time. Let's keep talking about them. Um, let's see. We have covered. I think at this point, I've got an 8 bot going with 20 times leverage, and that one's uh, doing just fine. Last time I talked about my ADA and Solana bots. Those are not doing as well, um, but still doing just fine. Um, Let's talk more about some of the other ones. We've got a couple, or I've got a couple going on XRP that might be interesting to look at. All right, so it may be worth it for me to mention or to point out that when you are using grid bots, the way most of these are set up for me, including these two that I have going on an XRP, where the grid bots are using lower leverage, in this case 5 times leverage. Um, the bots themselves are not going to make a tremendous amount of return on investment, probably, or at least not for a while, through the action of the grid trading. It'll take them a while to really accumulate uh, much capital. Really, these are kind of like long positions that I've taken, um, that are just isolated long positions, and the action of the bot really helps to produce a little bit of return, which helps to cover the cost of holding the position over a longer period of time, because you have to pay fees to keep positions open for long periods of time, and this helps to compensate for that. Um, but also because the bot will build up some margin through the action of its grid trading as it goes, it extends the liquidation level of the isolated position over time as it goes down. So it helps to kind of hedge a little bit and control your risk. Risk management is, I think, what I say, the kind of the most important thing about trading in this way, where you're trading rather than just investing for longer periods of time, and just sort of buying and expecting to hold for 10 years or something, because you can do really well with this type of trading and make loads and loads of money in a day or in a weekend, but it's very easy to then just lose everything that you have in your portfolio in one day, and then it doesn't really matter how well you did in the days leading up to that. So risk management is super important for us if you're going to engage in this type of speculative investment or trading. Anyway, so when it comes to XRP, we've got a bot that I started kind of with my first round of large 5 times leveraged bots, which again are more like long positions than anything. Um, and it is sort of first one. It looks like we're kind of almost in the grid, but not quite. And then we have a second one that I set with a tighter grid, that's smaller, that will do a little bit more frequent trading, but it's still 5 times leveraged, and still mainly I'm looking to make money off of these, because I think the price is going to go up on these assets, and so I'm trading them with 5 times leverage, using these bots as kind of a hedging strategy. And the second bot, as you can see, I gave it a little bit more room. I extended the grid down a bit further, um, because because the first one was getting way too close to the edge of the grid, and some of the other bots that I set up, I did not extend the grid down apparently as far as I should have, and so the ADA and the Solana bots are just sort of hanging out there, and they're not actively doing any grid arbitrage, so um, that's not optimal. So in my more recent ones, I've set the grids down a bit lower, to try and make sure that they don't accidentally go down below their grid and just go into loss and risk of liquidation, without at least also um, still trading as a way to try and avoid liquidation by extending that liquidation value down to a lower level. So When it comes to these, I have the first one I set up with kind of a taller grid, going up to $8 per XRP. The second one, I only went up to $6. Again, I've said it before, I'll say it again. Once, if the price actually does get up above these grids, it's really no big deal, because then it just sort of becomes a regular long position that you can take profit on or not take profit on. And just like with the Solana and ADA bots, while it's kind of getting near the edge of its grid here and is low in the grid for the second bot, if you look at our oscillator, which of course, like any indicator, you got to take with a little grain of salt, but it does look like, really, if anything, we're likely to see, we're kind of in the middle of a swing down, or we're approaching the end of a swing down for this asset. So there are some good signs here that XRP may be about to recover, or at least start ranging a little bit higher than it was before. It may not necessarily pump per se, but hopefully it'll start ranging a little bit higher in price, closer to the all-time highs that it just set, and it'll start getting back into our trading range, where the bots can start producing that little bit of return that will at least make it worthwhile to keep holding these, and will at least make some money, even if it doesn't necessarily pump right away. So yeah, I mean, this is pretty consistent with the other bots that I've shown you before. I've changed the colors a little bit so you can tell, you can distinguish between the two bots. One goes up to 8, the other one goes to 6, and then one extends a little bit lower than the others, and than the first one, and that's the second one that I created. So yeah, both of these I think I could hold for quite some time. I'm not sure exactly how much return these bots will be able to build up through the action of their arbitrage trading, but we'll kind of see. And if they can trade successfully, and especially if they do go up into their grids and start being in profit, I may remake them and perhaps mess with the leverage a little bit to try and get more of a return from their grid trading. But at least right now, I'm preferring to do this relatively, comparatively safer approach, where they have a more generous liquidation value starting out, rather than trying to catch this on a good upswing and hope that the grid trading can produce enough margin to dramatically extend the liquidation value down, which is what I was able to get to happen with my ApeCoin bot that I showed you the other day. But that requires, this could have easily gone bad, could have easily gone the other way. If the price had continued down, it would have gotten liquidated fairly quickly. And so I happened to make a good call on that trade, and it did not go down into loss and liquidation. Instead, it traded up and made a good amount of money on its grid trading as it went. This ApeCoin bot did. And because it's got a higher level of leverage, 20 times leverage, its liquidation value was probably more like here when it started. But because it's added margin through the action of its trading, it's now extended considerably further down, and this bot is now is now able to be held by me for a much longer period of time. And it actually, unlike the lower leverage bots, will make a significant amount of return from its grid trading. But it would have been in considerable danger of liquidation when I first opened it. So that's a much trickier way of using these tools compared to what I'm mostly doing and what I'm mostly showing you. And if I was going to recommend that you do this, I would recommend you do this with lower leverage, as I'm showing you, because this is a strategy that people use all the time, and that I use to trade spot, and that I do recommend that you use to trade spot, because over a course of a year, the grid trading, even with unleveraged grid trading, can add up to a significant return over a long period of time, like maybe 16% per year, which is a really rather good return, actually, for an investment, especially since you can get it pretty reliably trading this in spot, and you don't have to worry about liquidation. But by doing this with leverage, even with 3 times or 5 times leverage, and 3 times is relatively low or conservative, you can triple the amount of money that you're grid trading with, or septuple in my case, I guess, if you're willing to tolerate the possibility that the bots might get liquidated, as I am, and as I pointed out before, some of these bots, like this Solana bot, is in risk of liquidation, and I've already lost one of these, the Uniswap bot. So there is more risk involved, but that's risk that can be managed and controlled by just using lower leverage, or just being sort of careful about how much money you put into the bot when you first start it. Although, of course, if you put less money into the bot, it also will return you less overall over time. But I do think personally that trading with 3 times or with 5 times leverage with these bots, the liquidation risk is pretty reasonable, and you can trade with just much larger amounts of money. One of the problems with using these in spot is that these bots, because they don't enter with a full amount of margin when they first start trading, don't necessarily make as much money as they would, for example, if you just opened a long position with the entire amount of margin right from the beginning. And so if you're using these bots in spot, they're, again, a really useful and good tool to use. But strictly speaking, if you start one of these bots and, say, Bitcoin, you start a bot that's trading spot on a grid on Bitcoin, and it goes, and Bitcoin increases 10 times in value or something, you will not get as much of a profit off of that as you would have if you had just bought Bitcoin in spot and held it and then sold it at the top of its peak at 10 times its value. And so you never really get the optimal, perfect trade. You're never really going to quite get as much of a return as you would if you had perfectly traded that coin in spot. But these are still extremely useful to use because they do generate a significant amount of return on investment over long periods of time, and they can be run for long periods of time and make enough to counteract fees that you would have to pay to the exchange for using leverage. But also, these are useful to be used for this purpose, even in spot, where you're not able to magnify the amount of money you're using with leverage, because kind of like with a rebalancing portfolio, even though you aren't getting as much money as you theoretically could get by buying right at the bottom of a good dip, and then holding and then selling at exactly the peak of a pump by trading this way, the difficulty in actually trying to do that and actually trying to successfully buy the lowest dip and then actually sell the highest peak in a bull market or any market, it's just incredibly difficult. No, you're not realistically going to be able to do that. You're far, far, far more likely to just lose your money. And so if you have a mechanism like a rebalancing portfolio or like a grid bot like this, where you're going to capture most of that return, and with grid bots, you're going to get, 75%, 80, 90, like quite a lot compared to what you would get if you had traded it perfectly. Whereas with a rebalancing portfolio, it's more like you might get 50% of the return that you would get if you had bought it and sold it perfectly and traded it in spot perfectly throughout every single wave. With a rebalancing portfolio, it's as if in spot, it's as if you are trading, if you set it up well, it's as if you were spot trading successfully every single up and down in the market for that coin, but you're not getting the full return from that successful swing trade. You're only getting maybe half or something. But because due to the action of the rebalancing bot, you're going to consistently benefit from every pump and also buy in on every dip. It's a fantastic way to reliably outperform the market, and you can do it in spot. You can do it with leverage technically, although I don't know of anywhere that allows you to do it in crypto with leverage. But that perhaps someday I'll do a video on that, and we can talk about that and how it's was invented by a guy named Shannon and has been nicknamed Shannon's Demon because it's sort of it was a very surprising thing that he figured out. He was an engineer, and I think I wanted to say it was in the 1910s or the 1920s when he came up with the idea of the rebalancing portfolio. So it's been about 100 years since people have started using that. In any event, so let's move on to. Oh, yes, we did XRP. Okay, so XRP I think will do rather well overall. It's one of those blue chip cryptocurrencies. It's a big cap. Anybody who's in cryptocurrency generally is going to know what XRP is. And also, at least from what I understand, we're starting to see some institutional adoption of XRP in countries like Japan and other places that could do spectacular things for the price of that asset. Another one that I think has a really bright future and that I highly recommend everybody buy, just in general. Although, well, no, I shouldn't say that because I'm not here to make financial recommendations. None of this is financial advice. Don't listen to me. do your own research. But being an American and living in the U.S., of course, I follow politics here fairly closely. And the owner of the Tesla company, or the sort of quasi-celebrity associated with Tesla and also other companies and projects, Elon Musk, has been appointed to a newly created government agency, at least this is my understanding, called the Department of Government Efficiency. And his favorite pet cryptocurrency is Dogecoin, DOGE, and the name of the government agency he's been appointed the head of is abbreviated DOGE. So just the recognition, the name recognition alone, along with the fact that he'll probably be on the news talking about this, and also probably Baby Doge and Peanut and Goat and Cheyenne and other currencies that he evidently is interested in and will try to talk about. All of these things will likely do rather well because they'll get a whole bunch of free exposure. But Dogecoin in particular is the one that he has been talking about and helping to keep alive and successful through his celebrity, and so it's done rather well for that reason. But I think it's going to continue to just do extremely well over the next few years, or at least until the end of the bull market that we're all expecting in crypto to be happening for the next year, at least, I would say. So anyway, I have several bots trading Dogecoin. They're both going from some price close to its current price, like 0.28 or so, up through $1 per Dogecoin. Above that, I think I'll be satisfied if it's just a long position. I did not make this a super high grid like I did with ADA, where it'll just keep grid trading up to the moon. But this is still, we're talking about from about 28 cents per Dogecoin up to about $1. So it'll have to increase 400% before it actually gets off of its grid. So it's still a pretty tall grid by comparison. I have two of these guys going. The first one, the biggest one, is 5 times leveraged one, and let's see, its liquidation. It's a little harder to tell on this graph. Would be this one, this grid that goes down to 0.2. It's doing just fine. It's making a little bit of money, not a tremendous amount. But it's also in profit now, which is great. I'm not really sure where exactly it's starting point would be, what like actually really, its starting point would be about right here. So it's made like a teeny little bit of money just because Dogecoin has gone up in value since I started it. I think this is just the beginning for Dogecoin. But it's also made about about $5 trading through grid trading, which it's a $200 position. So it's a $200 long position that now has an additional $5 added to it. Whatever profit it makes, I'll have that additional $5 in profit. But also, it's an additional profit, a return on that initial $200 investment, which will have lowered the liquidation price somewhat. So it makes it possible for this 5 times long position to tolerate bigger dips in the price of Dogecoin than I would be able to tolerate holding it otherwise. And that's what we want to do. We want to be able to hold through dips when we've got these low leverage long positions that we plan on holding for a long time. And so this tactic is useful for to that end. The other bot that I have going, I have a 25 times leverage bot going on Dogecoin. And it's got a little bit of a wider grid. It goes all the way down to 0.22 on its grid. So it'll trade pretty far down. And this is kind of important and necessary if you're going to have a 25 times long grid bot going, because if Dogecoin does start to underperform, you really, really want it to continue grid trading even as it goes down and goes into loss and starts to approach liquidation, because you really need it to be trading with its 25 times leverage the whole time in order to get that liquidation price to go down to a more reasonable level. Currently, its liquidation price is this line, the 0.28. As you can see, it's fairly close to the current price action. And the way I have these set up, I believe I started these on the same day, so I might have seen it dip down and then come back up and started it somewhere around in here. So that position also is in profits, doing just fine. It is a much smaller position, though. I'm not usually super interested in risking larger amounts of money, like the $200 that is kind of around the area I've been making these 5 times leverage bots with. This one is $5. It's about enough to buy a sandwich here in the United States. And so it's really no big problem for me if this one gets liquidated. It's more of an experiment, something interesting to watch. But it should generate more grid trading profit proportionally, and hopefully will extend its liquidation value enough through its grid trading profit that it'll be less prone to liquidation over time. It's made about 50 cents so far. And so it's made about 50 cents, or I think 47 cents, which is less money overall than the $200 bot is made. That's made about $5. But 50 cents proportionally, 50 cents compared to $5 is proportionally more than $5 compared to $200. And so it's going to make a bigger difference with this smaller, higher leverage bot when it comes to moving that liquidation level down to a more reasonable price. So hopefully that one, hopefully Dogecoin will not take a bath anytime soon and will stay up in this area and not get below 0.28 for long enough that the liquidation level can go down to an area where I could tolerate max pain. But as it currently is, even if Dogecoin does trend down, as long as it stays above its liquidation value of 0.28, because that liquidation value is still within the grid for this bot, it will continue to add margin and extend its liquidation value slowly down, even as it goes down, if that is the trend that Dogecoin ends up taking. And so you do improve your chances with a higher leverage position of 25 times leverage of not getting liquidated in that isolated position, because we are using a grid trading strategy to hedge against that eventuality. So that is one way to use these bots. And depending on where these liquidation values actually end up with these higher leverage bots, it may be that they produce enough return on investment that it's really worth it to take this initial risk and let them trade and produce margin for a little while with larger amounts of money. I just am not quite convinced of that yet. So I'm really mostly using these for smaller positions, although I did that ApeCoin position again, which I made in the first video on that, and it's for reasons, because that was one that I opened a fairly big position. I think it's $225 with this, with about 20 or 25 times leverage, and I was watching this pretty closely when it first opened up, because that's a chunk of change for me to put into something that could be so easily liquidated. And I'm very, very happy that it did not get liquidated and now has a pretty reasonable liquidation value. Okay, so the other one that we can talk about. Oh wait, no, we talked about XRP. We talked about Doge. Uh, and let's see. I don't know if I addressed it or not on the last one, but really, kind of when it comes to the prospects for these coins in terms of just their overall price action coming up soon. Dogecoin, just like XRP, just like the other ones, a lot of these kind of are similar when it comes to the crypto market. A lot of things do move together. A lot of things move with Bitcoin. And so when it comes to these big blue chip, big high cap coins that are mainstays of the market, a lot of times they have similar price action. So just kind of like with some of these other coins, the Ikenashi indicator here is showing nice fat candles. We had a big wick down with this one, just like we did with some of these other coins. But it also recovered, and so we were showing support and strength. So hopefully, kind of like with these other ones, we've satisfied, hopefully, the liquidity that would have been created and needed some sort of satisfaction from the markets during the pumps following the election here in the U.S. With its pro-cryptocurrency or favorable to cryptocurrency outcome. The oscillator also is indicating that we're in an area where rapid price action may be possible. So when these white plus symbols are lit up in this indicator, we start sort of taking it a little more, we start sort of paying attention to it. It's an indication that might be a good time to enter a trade when these white plus symbols are lit up. And also the red bars are turning to dark red, which is an indication that may be a good time perhaps to open along. So just in terms of the two derpy kind of indicators that I use for my relatively straightforward analysis of a lot of these things, the stuff's looking pretty good. Another one that I do use a lot, although again these indicators do not really give you any information that isn't already present in the candles in the chart. These are just here to show you the information in different ways that kind of helps you do your technical analysis. So ADX and DI is another one that I think is super useful. Use it all the time for various purposes. You can see from this green line being above the median and going up here, this correlates with the big pump that we saw. Again, not showing us anything that we can't see on the chart, but it's just there. And then we have this red line coming up and overtaking the green line at the same time that we see this downward price action, this bearish price action. As the momentum, the white line on the ADX-DI indicator is just a measure of momentum. Was going up here at the same time we saw this big green pump. Peaked out right around here, kind of when we were getting up at this candle wick here that was right at the top. And then, as is so often the case, although the momentum is kind of declining during this time, the bulls were still in control, and we saw a little price action up here to a second wick, and we had kind of a sort of an equal high here, which generally speaking, when that happens in the market, you usually see a downturn afterwards, and the opposite is true when you see two wicks like this that are low, and you see equal lows. Often afterwards, the market will, you'll see bullish action, and that asset will pump in price, following it, at least temporarily. So, when it comes to this, we are starting to see the bears. The bears have been in control for a little while, but this red line isn't really going up anymore, and so we may see the bulls overtake the bears again. Of course, market's going to do what it's going to do. It does not matter what the indicator says. But we are seeing in this white line a bit of a trend up above this sort of benchmark line here, indicating that we might be seeing enough volatility and momentum to drive a movement in one direction or another. When the white line is below this little dotted line in the middle, might be difficult to see, but there is a dotted line there. We kind of use that as an indication that it may not be a great time to enter a trade on this coin or this stock, because there's just sort of not enough volume and momentum in the assets currently trading to really justify entering a shorter term position. So the way this works, typically you want to enter trades when this white line is above the dotted line being right there. And typically what you're really looking for is for the white line to be going up and getting up above the dotted line. For example, in this instance, where the white line has had a peak and it's going down, and the bulls are still in control here, and the white line is still above the dotted line, but I would not enter a long position at this point, because the bulls have been in control for a while. It's already had a big pump, and it's kind of tapering off in terms of its momentum rather than increasing, so that this would not have been a time that I would have been looking to enter a long position, even though the white line is above this sort of benchmark rule of thumb line right here. It has, however, gone down below the dotted line and has moved back up above it, which means that we might be getting some more momentum coming up soon for this asset, for Dogecoin. And it does look like the bears are still in control, but they were never really that well in control with Dogecoin to begin with. So I might be looking to see if this green line doesn't overtake the red line soon. Of course, I could be wrong. It's been entirely possible that we'll see more of a dip and this will continue down. But so far, these bots are looking really, really good. They're within the grids. They're trading actively. The smaller bot with the higher leverage is a little close to its liquidation value, but I didn't put a whole lot of money into it, so kind of not that big a deal if it actually hits that. But we will see. It may go on to extend its liquidation down pretty far, and that little $5 trade, which again is about the price of a sandwich, a relatively cheap sandwich actually, here in the U.S., may end up making me a little chunk of change, and that also is set to trade up to $1 in value. So the lower limits of my grids here are around 0.22, and then also around 0.22, just if you're interested. And also, oh no, they're both grids go down to 0.22 with Dogecoin for me. And so, yeah, so I kind of have all of my Doge grids to set up to go from 22 cents per Dogecoin to $1, $1 or $1 USDT rather, for Dogecoin. Yeah. All right. So those are a couple more of my bots going here. I've got one other that we can talk about, but that can wait until tomorrow. I also, if we're just going to look for things to talk about, may talk about a rebalancing portfolio I'm running. I may start others at some point, and how that works. I also think it might be worth just for fun, just to kind of talk about how I do, how I've been doing grid trading in spot. There's a way to do grid trading in spot where you don't have, where you can have all of the margin that you put into the bot go into um, coins that actually will have price action instead of having a bot that's just trading, for example, Bitcoin using USDT. The alternative to that, and you can't do it everywhere, but you can do it on one exchange that I use, will allow you to trade to create grid bots that use Bitcoin as the base currency. And so you are buying and selling Ethereum or Solana or another cryptocurrency using Bitcoin as the currency with which you are buying and selling. And so, in doing so, you can essentially be invested in Bitcoin because the bot will have some Bitcoin that it's just not using to trade that's sort of in reserve, which would normally be USDT or US dollars or something, or some sort of asset that does not have any ability to increase in value. You can instead have it buying and selling Solana or Ethereum, and you'll be making in profit. Your return on investment will be in Bitcoin rather than in USDT. And so you can kind of invest in spot uh, in Bitcoin and also in Ethereum or Solana or some other coin and grid trade those other more volatile um, smaller cap coins using Bitcoin as the currency in which you're taking profit. And that allows you to be in Bitcoin and also in other coins in spot and still be grid trading and making that little bit of extra return. That is how I would recommend doing grid trading personally in spot, if that's what you want to do. I also suggest, if you can do it, if you're interested in opening lower leverage positions, well, or even higher leverage positions, if you want to trade um, using leverage, just using regular leveraged derivative contract positions, I suggest that you find an exchange like this one, which is the one that I mostly use, BYDFi. And while I do have positions in where I've used USDT as the margin, uh, another excellent way to do this, and what I would suggest, is that you find places that offer, as this exchange does, the ability to open your positions in Ethereum or Dogecoin or DOT or something like that using Bitcoin as the margin instead of USDT. Because when you do that, you will potentially make money off of the increase in value of, as I said, Ethereum, Dogecoin, or DOT relative to Bitcoin. If you think that those coins are going to get more valuable compared to Bitcoin, which they might not, just be aware of that. Um, but by trading this way, you can be trading with leverage on Ethereum, Doge, and DOT, but also you can kind of be in Bitcoin in spot this way. You can make profit off of the increase in value in Bitcoin while also trading Ethereum, Doge, DOT, XRP, whatever it is that you have found that you can't trade. And there are not as many currencies available usually when you trade this way. So for example, in this exchange, you can only trade Bitcoin, Ethereum, Doge, DOT, and XRP. But uh, I would suggest that this is a rather good way to do leveraged trading, as you can kind of profit from the increase in value of the coin itself while also investing in that coin, also trading that coin. So it's a really good idea to do this. I have not done a tremendous amount of it myself, but I'm going to be looking into doing this soon, probably, if I'm going to be opening a lot of new positions that are just like plain old derivative, like with leverage trading positions. I likely will be doing more of those in the future instead of doing it with USDT, although I do currently do that as well. But that's kind of a subject for another day, another video. Lately, really have been just trying to talk about trading on grids. So, yeah, I'm Daniel. God be with you. Please take care of yourselves and make good decisions. And I will see you later. Or I will talk to you later, I suppose I should say.